Today's podcast is brought to you by Ryan, a leading global tax service and software provider that helps companies manage and minimize property taxes from acquisition to disposition and all points in between. As the firm with the most local market property tax professionals across the country, Ryan has experience in nearly every jurisdiction, unmatched by any other national, regional, or local provider.
Welcome to WMRE's Common Area Podcast. This podcast is brought to you by the award-winning editorial staff at WMRE. Let's jump right into this week's podcast.
Hello and welcome to the Common Area with your host, David Bodamer. David, how are you?
I'm hanging in there. How are you doing this week?
I am doing fantastic. I know that you brought a guest on the show today. Again, you've been getting great guests, man.
That's what we're trying to get all different perspectives, different levels of expertise. Hopefully people that are very interesting for the audience to hear from. So that's what we've done for this week as well. So this week, brought on Brandon Sedloff, who is the SVP of Sales and Managing Director for Juniper Square. So Brandon, welcome to the podcast.
Thank you. It's great to be with you.
So if you could just start with this, for our audience who may not be aware, could you just let them know who Juniper Square is and a little bit about your background?
Sure. Juniper Square is a real estate investment management solutions company founded in 2014. We work primarily with real estate sponsors of all shapes and sizes, from groups that are just getting started, raising capital on a deal-by-deal basis, up to supporting some of the world's largest institutional investment managers through very complex, open and closed-end fund structures. The company today has about $1.25 trillion of real estate assets being managed by more than 850 general partners or real estate GPs. And just to give you some perspective in terms of scale, across the platform, we have about 21,000 investments, and some of those investments are funds, some of those are single asset SPVs, but it gives a pretty good perspective in terms of the breadth and depth of what we're doing. The business it has been growing very quickly, approximately doubling every year, and we have about 250 people across the company who are supporting our clients, building software, and leading our different go-to-market strategies.
A trillion with a T, right?
With a T, yes, with a T.
Wow, so that's a lot of real estate, and I find it very fascinating. I've been covering this industry for over 20 years now, which is surprising to me to actually say it out loud, but for 20 years. And this has not always been, I think it's no secret to say this has not been the most forward-looking industry when it comes to technology. So it is very interesting to see, I think in the last few years, there has been it seems like a much more rapid acceleration of migrating a lot of processes like what you guys do into much more advanced, kind of bringing stuff up really into the 21st century. So, and it sounds like you're getting a pretty big take up, both from newer, smaller folks, but also some very large players.
Yeah, as you think about kind of innovation in the built environment and in real estate capital markets in particular, you're absolutely right. Our industry has been a bit of a laggard, and candidly, that's not surprising. I mean, this is an industry that's been built upon, built on relationships, been built on local industry knowledge, and an industry where people have been able to take advantage of the arbitrage in terms of the kind of the opacity or the limited transparency that exists. And so, this whole kind of technology movement has been going on for quite a while. I've personally been involved for the better part of the last decade as an advisor and an operator, and now leading the revenue and go-to-market for Juniper Square. And one of the observations that I have is that technology is great, but the real key is you've got to have technology that meets the market where they are, that solves real problems. And so, when we look across, private markets and private equity real estate in particular, the problem that we observed and the problem that we're helping to solve is the fact that you've got this massive multi-trillion, call it $16 trillion industry in North America in terms of private real estate that's entirely being run on spreadsheets.
Right.
And spreadsheets are awesome as a tool for ad hoc analysis, but they were never designed to be a system of record. And at the same time, you have more and more appetite from investors, from LPs, whether they're retail and high net worth or very large institutions, sovereign wealth funds, public pension plans, who want access to this asset class because real estate's been doing really well, especially private real estate. And with that, that need to get more access, they need information, and they have more power to ask the sponsors that they choose to invest with to help them understand what's going on with their investments. And so you come to this head where you have a skill and a will intersection, and our job is to help reduce the friction between the GP and the LP to allow them to exchange the information that's required on both sides. So that's where we sit in the ecosystem. But yeah, it's great to see technology advancing here.
And so within that, one of the reasons, the big reason that I wanted to talk to you as well right now is that you guys, I've seen that you've done research before, but in particular, you did this recent piece of research where you went to a bunch of your clients and senior executives in the space and to ask them about their fundraising goals and strategies and performance, and churned out some pretty interesting data. So I was wondering if you could just kind of walk us through, firstly, just like a high level, what were some of the takeaways? Why did you do this research? What are some of the high level takeaways that you got out of it?
Yeah. So you're absolutely correct. This past February, for the first 2 weeks of February, we surveyed about 150 senior executives at U.S.-based, real estate private equity firms across, all capital strategies and a mix of property types. We did the survey because we obviously have the benefit of having a pretty large and geographically distributed customer base to tap into. And, given all the different changes with COVID, one of the big challenges that's emerged is how do we raise capital in this, distributed environment where the ability to meet face-to-face is fundamentally different than it was in a pre-COVID environment. So the kind of the bottom line of the results from the survey is, it largely confirmed what many of us in the industry have observed over the past year. And it means that more capital is being allocated to the commercial real estate industry. The demand continues to accelerate, and investors are expecting more transparency into the investments that they're making than they have historically. And so, one of the things that we've noticed is that for sponsors that are able to leverage technology, they're able to raise more money faster. So what does that mean from a kind of a data point perspective? Let me give you a few highlights. So number one, the majority of the sponsors that we surveyed told us that they believe capital will be more abundant this year than last year, which is a great change. It gives us some kind of positive guideposts that people are adapting to the new normal post-COVID. Mm-hmm. The second thing that we heard is that nearly all respondents, about 94% of everyone we talked to, tell us that they intend to raise money this year. And compared to 2020, when most of the capital was being raised from existing investors because you didn't have the opportunity to do business development and meet new investors the same way with COVID, we're seeing a change this year where about 81% of those that we surveyed intend to raise capital from new investors in 2021. So those are some interesting trends, and there's a bunch more that we can unpack. I think the other kind of macro trend that we saw is that the average check size per investor is expected to go up. So our customers are in the industry, based on the survey respondents, are telling us that they expect to nearly double the size of the check that investors are writing in 2021 versus in 2020.
I think one of the data points was the 2020. What was the average capital commitment on the last raise? And the most, it kind of ran the gamut from less than 50,000 to over 10 million, the range that you use. But the most predominant answer was the $150,000 to $300,000 range. So what kind of investors are we talking about who are like looking to make those kind of placements?
Yeah, we've seen a real significant shift across our base to being able to access more retail and high net worth investors. Real estate, as we talked about, has been kind of the darling asset class for a long time, but it's largely been inaccessible by most people. And one of the benefits, one of the reasons I should say that it's been inaccessible is because the cost of administering a investor position, every new investor costs the manager something. There's a cost associated with needing to raise that capital, run them through the subscription, the marketing process, run them through the subscription process and the onboarding process, be able to report to them on an ongoing basis. Like these costs really can grow out of control if you need to continue to throw bodies at the problem. And so, one of the big shifts that we've seen is that the investors that our customers in the industry are telling us that they're targeting tend to be smaller in size but higher in quantity. And the enabler there is the fact that technology can reduce the cost of managing each individual investor position. So that's a real key distinction, because what that means is that in the kind of pre-COVID or legacy era, it was largely cost prohibitive to have 100 managers in a deal or 100 investors in a deal or 1,000 investors in a deal. But now that's not the case. It's not the case at all. By leveraging and utilizing technology. So a lot to unpack there, but it's absolutely a trend that we see.
And how aware are investors who are who are in that range, who have that kind of capital that they want to gear towards commercial real estate? How aware are they of the options out there, like all the different firms or all the different funds or something that can be placed? Because I think traditionally, when you think about a lot of wealth advisors or whatnot, they might want to point people towards REITs or or maybe more, or ETFs or mutual funds. So where does the process of unlocking all the options and educating people about the world of private real estate, how does that all happen?
Yeah, it's a great question. I mean, there's a variety of ways and channels through which this is happening. There's the kind of independent broker dealer model. There's the RIA model, and then there's the direct to investor model, where the managers are spending a lot more time in identifying and sourcing and building relationships with accredited investors. One of the big trends that we observed in this recent survey is that respondents who have professionals on their team that have the role of investor relations have the ability to raise substantially more capital than their counterparts who don't have a dedicated investor relations function. And to kind of unpack that even further, when you think about the capital raising process, there's really like two primary components. The first is, how do you identify and vet the investor, which is important from a legal and a regulatory perspective to ensure that they're accredited, et cetera. And then the second part of the process is, once you've identified the investor, how can you share the prospective investment opportunities with them? And so, one of the things that came out of the survey is there's this idea of a data room, and a data room is nothing more than a secure way to market and share investment opportunities with your investors. And it's interesting because the survey respondents told us that sponsors not using data rooms were 76% more likely to rate investor presentations as the most time-consuming part of the fundraise. Because not only do you have to go out and find these investors, but you also need to find time to share the information with them, walk them through the information, answer questions about it. Because ultimately, as you say, these are folks who are, investing their hard-earned capital or investing as a fiduciary with you as the sponsor, and they need to make sure that they really understand the investment that they're making. So, again, this is another example of where, the capital raise and capital formation process still has some challenges vis-a-vis efficiency, but there's real opportunity for our industry to embrace some of the different solutions, technology solutions like Juniper Square, that can help reduce some of the friction, in terms of, acquiring and managing the investors that they are able to source.
And then how does the process of continued communication work? Once So you've gone out, you've acquired the investors, and they're now investing with you. You did all that. You did all that stuff that you talked about. You you presented them with the opportunity. You got them in the room, in the door. You got their capital. Then how does that relationship continue to play out in terms of performing? I mean, reporting performance and just making sure that they're happy with what they got.
Yeah. So investors are willing to take investment risk. That's part of the nature of the beast. If you're not willing to take investment risk, you probably shouldn't be investing in real estate or in alts at all. So it's known that investors are willing to take investment risk, but they're not willing to take operational risk. The expectation is that the operations of running the business are sound. And so to answer your question, there's two things that happen. Once you secure the investor and you place them into the investment vehicle, as a fiduciary, you have an ongoing obligation to continue to support and communicate with that investor. So at a very basic kind of minimal level, that means you need to share kind of requisite tax documentation, legal documentation, et cetera, things like your K-1 at the end of the year for taxes. But candidly, that's not good enough anymore. In the kind of early era of real estate investing, it was a bit of a black box. Investors were willing to give managers money, and managers were unlikely to share a lot of details about how the investment was performing on an ongoing basis. And investors would get a check once a quarter, if they were lucky, or once a year, and hopefully that check was for a lot of money. But they really had no idea what was going on. But if you look at kind of the broader investment landscape and how it's become a lot more consumer centric, look at Charles Schwab or Fidelity, for example. When you log on to your online brokerage account to buy and sell a REIT or a public security, you have near perfect transparency. You know what's going on, kind of what the daily marks are, what you could buy it for, what you would sell it for. You have access to all the legal documentation. And so this same trend that we've seen take place in the public markets over the last decade is now taking place in the private markets, where your average investor, whether it's a high net worth investor, a sophisticated family office, or a large institution, is expecting a lot more from their manager than they used to. And so what that means is two things. Number one, if you're a big enough firm, it means that you need to have a dedicated team of accountants and controllers and investor relations professionals who are available to serve and answer the questions that your LPs have. But more and more, we're seeing a trend around outsourcing because we mentioned before how investors are not willing to take operational risk, and investors want to invest with managers who are great at generating alpha. And the way that you generate alpha and you outperform is you have access to the best deals, your markets better than anybody else, and you have the ability to raise capital to take advantage of those opportunities. In my nearly 20 years in the commercial real estate industry, I have yet to hear a CEO come to me and say that, the thing that we're better than anybody else at is accounting. Like, it just doesn't, they might have the best accountants, and that's awesome. And absolutely nothing against any of our friends in accounting. It's a critically important job. But the point here is that what investors are saying is they're saying, we want specialization. We want you to do what you're awesome at. And the thing that sponsors and GPs are awesome at is generating alpha. The thing that they're not as awesome at is outsourcing. And so we're seeing a really big shift towards outsourcing some key components of the role, whether it's investor relations, investment accounting. And this is a pretty new trend. And it's a trend that we can kind of look at from other places in the alternative space, like hedge funds, which, for example, have probably a near 99% administration rate, where 99% of hedge funds use a third-party administrator. And so this is a business that Juniper Square is in, the ability, the kind of outsourced investor operations, investment accounting business. And the reason that we got into it is because our customers and the market at large told us that they need help with their middle and back office, either to augment and up levels the team that they have, or they need help, making sure that they can assuage any investor concerns around specialization and focus. So it's a big trend that we're seeing, and it's a trend that we expect to continue and accelerate.
Interesting. So just to make sure that I'm getting that right, basically you're talking about real estate, traditional real estate, private real estate companies, look who maybe were just doing all the stuff in house, now looking at some of these functions and realizing that like it's probably better if we have a third party who's an expert at some of these things handle them, and that includes like the accounting and some of the other, and I guess reporting as well, and maybe some of these other tasks.
Yeah, that's correct. So you either, you need a combination of technology, and you need a combination of services. And so the question is, where are you going to, find both? And do you do it in-house or do you outsource it? And, the big shift that we're seeing is towards outsourcing a lot of this work with technology enabled platforms, because it's a two-part problem. Part one of the problem is, do you have the right people with the right levels of competence and industry knowledge and depth of experience? And then the second part of the problem is, how do you enable those people who are doing the work, whether they're internal or external, to deliver the outcomes of that work, the reports, the statements, the legal docs, the marketing docs, over to your LPs, current and prospective, to make sure that they're having what they need. So they're actually more kind of interrelated than one might think. But the shift is really in terms of the delivery mechanism. The outcome is the same: getting LPs the information they need, because they're increasingly demanding more and more of it.
I think there was one other point in the report that I thought was interesting. Hold on, I'm just checking that I think it had to do with the speed around this fundraising process, and folks make me looking to get streamline how quickly the money's getting in the door, and there also maybe being some differentiation between syndicators and funds. So can you talk about that?
Yeah. So I think there's a few things. I mean, number one, if you think about Juniper Square and the customer base that we have, you could imagine that we might have a positive selection bias, meaning, sponsors who come onto the platform who have information that, who have information that they want to share with their investors, typically have a pretty good story, or they're more willing to be kind of transparent. So a lot of times, investors are actually realizing that, hey, I've made 2 or 3 passive investments, or I'm a large institution. Let me underwrite the middle and back office and the different technology stack to make sure that, I know that there's some transparency. So actually utilizing technology is becoming a fairly significant marketing advantage and a significant differentiator for GPs raising private capital. One thing that we observed in the data was that customers of Juniper Square, so our clients, raise capital from existing investors 28% faster than non-Juniper Square customers. And specifically, when it comes to funds, Juniper Square clients raise funds 2.25 times faster from existing individual investors, and 26% faster from existing institutional investors. And that trend persists. It's not just about the rate at which folks using Juniper Square and using technology can raise capital, which shouldn't be understated. That's a massive, massive step function change. But Juniper Square clients also expect higher follow-on or re-up investment rates. So we have a 14% higher follow-on investment rate than non-customers. So for Juniper Square customers, it's 65% expect or have a follow-on or reinvestment re-up rate, versus 51% for non-customers or folks who aren't utilizing technology. So, this is all to highlight the importance of transparency and the importance of being foot forward and sharing information with your investors, because ultimately, we all know that, things can go really well and things can go terribly sideways. I don't think anybody expected a global pandemic to shut down the economy for many, many months and likely many, many years to come. But what's really critical is that anytime you're faced with a challenge or an opportunity, you need to have the mechanism to be able to communicate your successes and your challenges with your stakeholders. And so regardless if it's a good story or a bad story, the number one thing that we hear time and time again is the ability to communicate performance, the ability to share, and be transparent with your investors is a key differentiator. Because if you can't, your competitors will. And at the end of the day, we heard some of the statistics about, how many, 94% of respondents intend to fundraise this year, we know that there is a lot of competition out there. And so, it's really, really critical for real estate GPs to think about how they can differentiate themselves from their competitive set when they are going out to the market to fundraise this coming year.
Yeah. So, I mean, it makes a lot of sense to think that, if you're an investor and you're making not a inconsequential play in one of these situations, if you're going for a specific asset or a fund, if maybe where there's risk and like you may be aware of, okay, the world has just been turned upside down, so I don't know what's going to happen. You at least don't want to be in the dark. You want to have as much information from as it's coming in from the person who's managing your money as you can. And I mean, certainly this year for real estate was not like anything any of us had ever experienced before, and it had all these even sections to it, like the first phase where just like nobody knew, everything was shut down, nobody knew could really make any heads or tails of how we were going to be affected. Then we kind of had the second phase where there were some distinguishing between, okay, which kinds of property types were more or less affected by social distancing and by the ways that we were living our lives, and there were some emergence of winners and losers. And now we're kind of in this phase of moving to the post-pandemic. We're moving into vaccinations, and then seeing like, oh, maybe not, like hotel and retail may be interesting again, whereas they looked kind of risky, super risky when they're obviously shut down. And office has got still some question marks because we don't know how fast we're going to go back to it. So like, as the GP, being able to make sense of all this, depending on what property type you have, and communicate all that to the investor, seems like a pretty important thing, and especially a way for people to continue to build some goodwill, or with their stakeholders, and then be able to kind of build off of that partner. If you did well during this period, even if you didn't deliver returns, at least you guided people through this and maybe now are in a position to deliver returns. That's going to be good for the long term in terms of re-winning business.
That's absolutely right. I mean, I think the future is largely a known unknown, and what we've seen over the last several decades of private real estate investing is that great operators, great sponsors with really deep knowledge in the asset classes and the sub-markets that they operate in are going to find a way to persist, in a way to thrive, in a way to outperform their peers. And so, when you think about, the importance of your reputation and your track record, it is for those sponsors who have an exceptional track record, this is their secret weapon. This is the thing that they need to get in front of prospective and current LPs, and they need to be able to demonstrate, they need to be able to show that they have a consistent track record of outperforming. And that we saw signs of the importance of that in our survey results. More than 80% of the respondents told us that referrals will be their top strategy in 2021 to find new investors. And like anything else, same for our software business, same for, finding new investors. A referral is so much more valuable than a cold call or trying to build a new relationship with an institutional investor from scratch. And so, the point here for sponsors and prospective sponsors to note is that if you've been investing for the last decade, whether you're doing deal by deal or funds, whether you consider yourself to be a professional investor or not, you have a track record, and you need to have a way to get the information, the data, your performance into a format where you can easily share it with people who are interested to learn more about what you're doing, including your investors who have already committed to investing with you. So this is one of the great ways that technology can enable and accelerate the transformation in our business and help sponsors and their investors reduce the amount of time that it takes to raise capital, reduce the cost of raising capital, because it can be very costly for folks to find one another and to facilitate that exchange of information and reporting at the position level. So, this is what we talked about early on, where, what is the problem that technology is trying to solve? Well, We need to be able to meet the market where the market is. We need to be able to create the pipes, create the infrastructure that's going to support this transformation as more and more folks want to invest in private real estate. And as private real estate becomes more accessible, with those two trends that we're seeing, it means that the competition, if you're a GP, is far more significant, and you need to be positioning yourself to be able to outperform your peers and at least meet the market where the market is with basic levels of information, like ways to share information around the performance of investments that you have, ways to demonstrate your track record, and consistent and frequent communication with your LPs.
Well, one last question is just where can folks see this report?
Yeah, if you go to our website, www.junipersquare.com, click on the section called blog, and we have a blog post. There's an ability to download the report right from the blog, so please feel free to do that. If you have any questions or comments, I would encourage folks to connect with me. The best way to reach me is via LinkedIn, and that's linkedin.com /B Sedloff, B S as in Sam, E D as in David, LOFF as in Frank, Brandon Sedloff. I am very happy to connect with folks on LinkedIn. And if you'd like to see the Juniper Square product, please feel free to reach out to our team. sales@junipersquare.com will get you connected with the right person.
Well, Brandon, thank you so much for taking the time to walk us through this. And I know this is stuff that I was really interested to hear your insights on. So I appreciate you taking me through all that.
It's been fun. Thank you for having me. And I hope that you and your listeners find it useful.
Guys, this is great. David, thank you so much for bringing me on as a guest. I love podcasts that have some good news around them, and I heard a lot of good news in this one, so thank you for that. And of course, our last thank you goes to you, the listening audience. Thank you for tuning in and listening to the Common Area Podcast with David Bodamer. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when David comes out with a new podcast, it'll show up directly on your listening device. This makes it much easier to share these podcasts with your colleagues. Again, thanks so much for listening today. For everyone at WMRE, this is Eric Johnson inviting you back in 2 weeks for all the stories that matter to you. And we'll talk to you soon.
Thank you for listening to the Common Area Podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of WMRE or Informa. The content has been made available for informational and educational purposes only.
Today's podcast was brought to you by Ryan, liberating our clients from the burden of being overtaxed, freeing their capital to invest, grow, and thrive.